Hello students, we are in the video of part 2 in terms in accounting. So we will discuss a few more terms in this video. Let's look at the terms that we will discuss in this video. We will discuss the 7th term, which is called liabilities, and the 8th term called assets. Let's go on to the 7th term, liabilities. 7th term, liabilities. Liabilities refer to obligations or debts which the enterprise has to pay in the future. So any amount which is owed by the company or the business to others is called liability. Whatever it owes to others, that is called liability. Liabilities are of two types. First one is internal liability and the next one is external liability. An internal liability is the liability of the business to the owner. We've already seen under business entity concept, the amount invested by the owner in the business is a liability from the point of view of the business, a liability of the business towards the owner. So this liability of the business towards the owner, to the extent of the capital which is invested by the owner, is called internal liability. An external liability is liability of the business to outsiders. It could be to a bank for loan borrowed. It could be for bank overdraft taken. It could be for payment to creditors. All these are examples of external liability. Liability of the business towards outsiders. Liabilities can also be classified as a non-current liability or a current liability. What is a non-current liability? It is a liability that has to be paid after 1 year of the date of the balance sheet. So any liability which has to be paid after 1 year from the date of the balance sheet will be classified in the balance sheet as non-current liabilities. Example could be long-term loans or debentures. What is a current liability? A liability that has to be paid within 1 year of the date of the balance sheet. That is a current liability. Examples are creditors, bank overdraft, bills payable, outstanding expenses, income received in advance, and short-term loans. 8th term, assets. Assets are properties which are owned by the business. The word owned is very important. Whatever is owned by the business is called an asset. These will be economic resources of the entity which will give the business a benefit in the future. Let's check out the features of an asset. It should be owned by the enterprise. It can be a tangible asset or an intangible asset. It should have some value attached to it, and the value should be capable of being measured in terms of money. So these are the 4 features of an asset. Assets may be a non-current asset, a current asset, or a fictitious asset. Let's check out non-current asset. These are held not for the purpose of sale. They are meant to be held on long-term basis. For examples, fixed asset, non-current investment, which are long-term investments, and long-term loans and advances. So we are talking about assets which are not held for the purpose of sale. They are held by the enterprise in order to get a benefit in the future. Fixed asset may be a tangible asset or an intangible asset. What is tangible asset? An asset which has physical existence and can therefore be seen and touched. Examples are land, building, plant, equipment, furniture, motor vehicles, and office equipment. So, in the case where Mr. Gupta is starting a stationery business, when Mr. Gupta buys furniture, cupboards, etc. for the stationery shop, it is called tangible asset because it has physical existence and can be seen and touched, and the cupboards, etc. are not for the purpose of sale. They are held for the purpose of increasing the earning capacity of the business. Intangible assets are those assets that have no physical existence and therefore cannot be seen and touched. Examples of intangible asset are goodwill, brands, trademarks, copyrights, and patents. So goodwill, etc., which is a measure of the reputation of the business, is called an intangible asset. It is a fixed intangible asset. It has no physical existence, cannot be seen and cannot be touched. The next type of asset is current asset. What is a current asset? A current asset is held by the business for the purpose of converting into cash within a period of 1 year. Examples of current asset are cash in hand, cash at bank, debtors, bills receivable, stock or inventory, prepaid expense, and income due but not received, otherwise called accrued income. The third type of asset is called fictitious asset. These are neither tangible assets nor intangible assets. They represent losses that have to be written off in more than one accounting period. Example is preliminary expenses, share issue expenses, discount on issue of debentures, deferred revenue expenditure, or advertisement suspense. We have learnt two terms in this video, liabilities and assets. We will continue learning the remainder terms in the successive videos.